Get ready for explosive news. Intel shares have absolutely soared on a massive report detailing the potential deal with Apple. This development signals a total pivot in the entire chip-making landscape, and we dive into exactly what this means for the future of silicon.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the massive rally in the semiconductor sector. We're seeing major ETFs like SMH and SOXX jump, driven by the expanding AI trade. Find out which companies are leading this charge and why investors are moving their money into power gear for data centers. Now, let's talk about the broader market reaction. While the Dow barely moved, the Nasdaq and S&P 500 hit new records, fueled by the AI story. We'll break down the economic data and what this tells us about the overall health of the U.S. economy. And finally, we have a huge story on the ground. Intel surged on that Apple agreement, but we also see other big moves, including Rocket Lab's success and Nintendo's upcoming Switch 2 price hike. Don't miss the full breakdown of these market shifts. Noi dung kai tight. Intel shares surged nearly 14% following reports of a potential major deal with Apple, signaling a significant potential shift in the global semiconductor landscape. Reports indicate that Apple and Intel are close to finalizing an agreement for Intel to manufacture some of the chips used in iPhone devices. This development has prompted strong investor confidence, with Intel shares climbing over 200% this year. /N/, this potential partnership represents a major vote of confidence for Intel's foundry business, which has historically faced challenges with delays and yield issues. Analysts view this as a crucial validation of Intel's capability to serve as a credible second source for advanced chip manufacturing. /N/N for Apple. The implications are profound. Currently, the company relies almost exclusively on Taiwan Semiconductor Manufacturing Company, TSMC, for its most advanced chips. However, soaring demand for AI chips is straining TSMC's wafer capacity. Apple has been aggressively developing its in-house silicon program to produce core components for its devices. /N/N, according to chip analyst Ben Badgerin of Creative Strategies, Intel is positioned as the only viable option to scale up capacity as a second source for Apple. Badgerin noted that while Intel's current 18A node is considered a little bit rough, the upcoming 18AP node is expected to significantly improve manufacturing capabilities. He suggests Apple may adopt Intel's next node, 18AP, which could become viable next year. /N/, while the deal with Apple would be transformative for Intel's foundry sector, analysts suggest it would not immediately impact TSMC, as TSMC is already operating at maximum capacity. However, TSMC has recently signaled increased competitiveness, calling Intel a formidable competitor. Intel is rapidly expanding its capacity, with a new fabrication plant in Chandler, Arizona, now in high-volume production on its 18A node, aiming to compete with TSMC's 2nm technology. Furthermore, Intel maintains significant commitments from other major customers, including Amazon and Cisco, for advanced packaging solutions. Looking further ahead, Elon Musk has expressed plans to rely on Intel's future 14A node for Tesla and SpaceX applications, with volume production anticipated in 2029. /N/, the competition for advanced manufacturing is intensifying, with Samsung, Intel, and TSMC being the only three entities capable of producing the cutting-edge chips required for the AI boom, a demand that no single company can meet alone. Semiconductor stocks have experienced a significant rebound, fueling a surge in AA-focused exchange-traded funds and setting new records for the S&P 500 and Nasdaq. Nvidia posted gains, while Micron and SanDisk both surged approximately 12%, with the Philadelphia Semiconductor Index climbing nearly 5% according to Reuters. The market shift is characterized by investors moving beyond individual chip designers into broader ETFs and companies supplying critical power gear for data centers. Funds like the VanEck Semiconductor ETF, SMH, climbed roughly 4.7%, while other key indices saw substantial gains. SOXX advanced around 5.4%, EWT added 1.8%, and EWI jumped 7.4%, alongside Eaton edging up by 0.8%. This recovery follows a period of volatility, as the VanEck Semiconductor ETF, SMH, had previously dropped 13% from late January through March, before rebounding on renewed interest in AI hardware. ETF performance highlights the sector's strength, with SMH achieving a 49.96% net asset value return through May 7, boasting assets of $60.99 billion. BlackRock's SOXX recorded a 63.68% return on NAV, and EWI surged by 85.22% over the same period. Analysis of the ETFs reveals differing concentrations. SMH is highly concentrated, with NVIDIA accounting for 16.91% and Taiwan Semiconductor Manufacturing Co. at 10.3%. SOXX tracks a broader U.S. index with 30 names, while EWT and EWI focus heavily on key Asian players such as Taiwan and South Korea. Asia is firmly at the center of the AI supply chain, with the region's top 3 firms, TSMC, Samsung Electronics, and SK Hynix, experiencing all-time high profits, signaling a seller's market for AI suppliers, according to Fubon Financial Holding Fund Chairman Alex Huang. Meanwhile, Eaton is positioned at the crucial intersection of semiconductors and power infrastructure. The company reported a 17% climb in first-quarter sales, driven by a 240% surge in data center orders in its Electrical Americas segment. Eaton has further cemented its connection to the AI push through collaborations, including a liquid cooling agreement with Boyd Thermal and a power platform partnership with NVIDIA. Despite strong demand, Eaton shares faced a temporary dip, as scrutiny focused on segment margins, which fell 120 basis points below the prior year's level, even though overall earnings beat expectations. This signaled investor caution regarding sustained profitability. Analysts caution that the concentration in the sector presents risks, particularly if capital spending slows, AI funding tightens, or memory prices decline. However, overall market sentiment remains positive. Chief investment strategist Rob Williams suggests the U.S. economy appears resilient, and fresh LSEG figures indicate that AI-driven giants are driving a nearly 29% potential jump in first-quarter S&P 500 earnings, maintaining momentum for chip ETFs and AI infrastructure stocks. The U.S. stock market saw a significant divergence on Friday, with the Nasdaq Composite and the S&P 500 posting record gains driven by a strong artificial intelligence rally, while the Dow Jones Industrial Average experienced a modest rise. The Nasdaq surged by 1.71% to close at 26,247.08, and the S&P 500 climbed 0.84% to 7,398.93. In contrast, the Dow Jones barely moved, gaining only 0.02% to finish at 49,609.16. This market action followed a solid U.S. jobs report released by the Labor Department, which indicated an 115,000 increase in non-farm payrolls for April, with unemployment holding steady at 4.3%. The report helped temper recession fears, though it did not immediately alter expectations for the Federal Reserve to maintain current interest rates. Tech stocks were the clear winners, dominating the market performance. NVIDIA climbed 1.8%, and semiconductor players like Micron Technology and SanDisk both surged around 12%, fueled by sustained demand for AI data centers. This momentum extended to the broader tech sector, pushing the Nasdaq to a 6th consecutive weekly rise. However, the performance was not uniform across all sectors. While blue-chip stocks like Cisco, Boeing, United Health, Apple, and Nvidia performed well. Others lagged. McDonald's, Salesforce, Home Depot, and J.P. Morgan Chase dragged down the Dow, with Salesforce slipping 2.56% and McDonald's losing 3.02%. Analysts remain optimistic about the economy, citing solid productivity, robust spending, and strong earnings, with some firms raising year-end forecasts. Despite the positive earnings picture, underlying consumer sentiment showed signs of strain. The University of Michigan's first reading on May consumer sentiment dropped to 48.2, signaling that shoppers continue to feel the pressure of high costs, including gas and tariffs. Consumers now anticipate inflation at 4.5% for the year ahead. Looking ahead, the Dow faces potential headwinds if oil prices remain elevated. Persistent high crude prices could fuel inflation expectations, potentially keeping the Federal Reserve from cutting rates and pressuring rate-sensitive sectors within the Dow, such as banks and industrials. Overall, investor focus remains sharply concentrated on companies demonstrating strong earnings, semiconductor performance, and their integration into the booming AI narrative. Noi Dung Kai Tight. Stocks closed at new records, driven primarily by strong performance in chip stocks, following an April jobs report that surpassed expectations and eased economic anxieties. The S&P 500 and NASDAQ 100 both hit new record highs, with the Russell 2000 also gaining. April payroll figures showed an upside surprise, helping to diminish lingering fears about the economy and labor market risks, while the unemployment rate remained stable at 4.3%. /N information technology emerged as the top-performing sector, led by a rally in chip stocks. Intel surged following news of a preliminary agreement with Apple regarding chip-making, a potential game-changer for its foundry business. Other notable gains included Dell, spurred by a comment from President Trump at a White House event, and Rocket Lab, which reported better-than-expected first-quarter sales and strong second-quarter guidance. /N in the AI infrastructure space, IREN rose after NVIDIA announced a $2.1 billion investment in a partnership to deploy up to 5 gigawatts of AI infrastructure. Akamai soared to its highest level since 2000 after revealing a $1.8 billion cloud infrastructure deal with Anthropic, a move that propelled the cloud services company up over 25%. Fluence Energy also surged following supply agreements with hyperscalers, while Innodata boosted its 2026 revenue guidance to at least 40%. /N conversely, several tech stocks faced headwinds. SoundHound AI fell as its Q1 sales beat was insufficient to satisfy investors, and HubSpot cratered amid renewed AI fears, overshadowing its Q1 results. Cloudflare dropped due to soft second-quarter guidance and layoffs, and CoreWeave sank after issuing weak sales projections for Q2. Nintendo shares fell nearly 4% in pre-market trading after announcing a $50 price hike for its Switch 2 console in the U.S., amid memory crunch pressures. /N in the nuclear energy sector, NuScale shares dipped after releasing disappointing Q1 earnings, with revenue significantly below estimates, leading to analyst downgrades. Despite the setback, NuScale CEO John Hopkins maintained the company's position, emphasizing the critical need for reliable, carbon-free power and the company's SMR technology readiness. /N meanwhile, the AI landscape saw significant activity as Anthropic intensified its race for compute capacity, striking or expanding deals with major players like CoreWeave, Amazon, Google, Broadcom, and xAI. However, the overall market sentiment showed divergence, with some companies like the Trade Desk dropping due to lower-than-expected earnings and weak guidance. Retail sentiment flipped towards call buying, indicating a shift in investor positioning.